Well, folks, Nvidia stock is now down over 14 percentage points, just where it was 3 mornings ago, essentially. It's down another 5+%. Here today, people want to know, is it the bubble pop? So I want to react to that, kind of share my perspective and opinions on what's going on with the market here in Nvidia, okay? Then we got a few videos to react to. First one up here, earnings estimates are accelerating higher. Fidelity Investments, looking to hear what they have to say in regards to that one. And by the way, does anybody else not like Fidelity's new iPhone app? I do not like it at all. Like, I wish they would switch it back. I think I saw a few comments about it the other day. Fidelity needs to get on that. Like, their app used to be phenomenal, and they screwed it up. All right, the next video we're going to get into, this is going to be a great week for AI investors, says Gene Munster. Okay, that should be interesting, because it's certainly not starting out as a good week. It's starting out a very bad week. And then last video up here to react to, Nvidia's growth is going to continue for at least the next 18 to 24 months, says this gentleman, which would, if that's true, then you don't really have to worry about Nvidia going down right now. It's definitely a buy, if that growth is going to last for at least 18 to 24 months. So appreciate y'all joining me as always. Thanks so much for being here. I'll ask in return, smash that like button and make sure to subscribe to the channel. 46,000 plus subscribers strong. So in regards to Nvidia, it is, I would say, to see it under 120 is pretty interesting, right? I mean, but the thing you got to understand is if we just back this up a little bit, let's just pull up a 3-month chart, for instance, right? I mean, it was not that long ago, it was under 120, like right here, right, 119. So that was June 5th, right? And so sometimes when you have these kind of blow off top situations in the short term where you see a stock go to 140, which happened in Nvidia, to see it go back to, let's call it $20 a share in losses, which is a pretty big percentage, about 15% or so, right? It is kind of like surprising to see that, like, wow, it just lost 15% that quick. But remember the parabolic move it had right here. I mean, even on a 3-month chart, it's still up 24%. If we back it up to 6 month, it's up 142%. And if we go to year to date, it's up 148%, right? So that's just, something to keep in mind. If we take it to 1 year, it's up 194%. But throughout this move, Nvidia's had plenty of down moves throughout this move, right? Plenty of them that were pretty vicious at their particular time. This isn't even the most vicious of the bunch. This right here was the most vicious, where the stock went from 95, we could call it on a split adjusted basis, down, and this is in less than a month's time, down to 76. That was the most vicious, and that was a percentage basis. That's what could we call that, 20+% on a percentage basis. So very big fall there. Now, you're not getting a ton of follow through outside of that. You look at other big tech, it's not like big tech in general just getting pummeled, like Meta's up today, Uber's up, Apple's up, IBM's up. I think that's important if you want to, I have a specific AI stocks watch list. Let's see what's going on with that today and if it's more than Nvidia. So what do we see here? Look at that. It's Nvidia. It's Nvidia specific, right? 5.66%. So what this tells me is, Palantir's having a good day today. It's up 1.5%. What this tells me is this is simply money moving around. And when I say moving around, Nvidia's stock has gone up so much. I showed you a 3-month chart, 6-month chart, a year-to-date chart, that it's way overweight in certain funds. And either some of these funds have to liquidate or they want to liquidate Nvidia. They're just really looking for a reason, right? And then when you have this liquidation happen, you have a lot of people that have stop losses on. When those stop losses get hit, it causes more selling pressure, obviously, right? Which then causes more selling pressure and more selling pressure. And Wall Street's much more likely to do stop losses than they are to do something like, have it automatically set to buy. Like Nvidia hits 119, automatically buy it, right? Ooh, might push 118 here. Nvidia, it's getting pretty darn close. So that's, is there something broken fundamentally in Nvidia? No. But there's something broken in the stock price short term. But that will be that. And at the end of the day, if Nvidia comes out, announces another banger quarter with another big beat, the stock will be right back up. It's going to be pushing 150, 160 after that, right? So, but right now it's very entertaining, I gotta say, to kind of watch that big of a downfall. And if we go to, let's say we go to, I want to see some of my stocks here today and kind of what's going on for the action out there. By the way, look at Bitcoin today. Bitcoin down to 60K, down another 4.5%. in Bitcoin and Nvidia can kind of move together a little bit. Like, let's look at a Bitcoin chart as well as Nvidia, right? Let's stack those next to each other and see what we have going on here. So if we pull up a 1 year, I mean, they go pretty good together. Nvidia is just, the difference is Nvidia had this last blow off top here recently, right? So Nvidia's sitting at 193% gain on a 1 year. Bitcoin's at 96%. But it's crazy because you look at those and they move together very strong up until this last kind of the recent blow off top here in Nvidia. So I think that's pretty darn intriguing. But outside of that today, it's kind of a mixed bag day, right? I have some stocks red out there. I have some stocks green. Definitely a mixed bag day overall. But in terms of Nvidia, do I see that stock going back to 140 in the short term? It depends on how short term we're talking. Or if we're talking in the next day or two, probably not. If we're talking over the next month or two, I would say actually probably a pretty high probability Nvidia pushes back to 140 much sooner than a lot of folks are anticipating. Let's put it that way, right? And remember, you got a lot of rebalancing that's going to help Nvidia starting in July. So I think right now they're being hurt by a lot of rebalancing that's going on out there. But in July, they should actually start to benefit. So, and that's not that long from now. Basically, that's a week from now, right? It's June 24th today. That's a week from now. So, for anybody that's looking to buy stock, this particular time is actually pretty interesting, time to kind of be a buyer out there, especially if it goes lower. If this somehow hits a 115, ooh, okay, now we're talking, right? And when you look at valuation, is valuation crazy on Nvidia? It's not. It's not crazy, right? Their business, in order for their valuation to be crazy, their business would have to completely fall apart. At a 50 forward P, at a 2 year forward P, at a 33, that's not crazy. Not with these sorts of growth rates that the company's been hitting and is expected to continue to hit. It's not crazy at all. So just a little food for thought in regards to that. By the way, if you want to apply for access to 1000xstocks.com, you can go to 1000xstocks.com and apply for access there. All right, guys, let's get into these videos.
One is the ongoing bifurcation in the market, but also this idea that we're in some kind of earnings upcycle and what that might mean for the second half.
Yeah, so earnings estimates are now accelerating higher, which of course is a very good sign because that is what underpins bull markets, and we've been in a bull market since October of 2022, so we're in month 20 or 21. Markets rallied about 55%. So a typical bull market will go for 30 months and rally 90%. So there's no reason to think that there is not still some life left in this bull. And as you mentioned, earnings growth is now accelerating, which is very important because when you have an early cycle bull market like we did in 2023, it's all led by PE expansion, and that's very typical because price anticipates the earnings recovery, and not always correctly, but it does always anticipate, so it discounts the future. So early phases of bull markets always happen with multiple expansion, even though earnings are not yet accelerating. And then the baton pass has to happen from earnings growth, from PE expansion to earnings growth, and that's now happening. So the second quarter earnings season will start, in a few weeks. The estimate going into that earnings season is for a growth rate of +9. Usually you get a bounce, so we might see double-digit earnings growth for the second quarter. But the market, as you mentioned, remains highly bifurcated. The top 10 stocks in the S&P since this mega cap bull market began 10 years ago have outperformed the bottom 490 by 112 percentage points. And so that creates a risk, of course, but also an opportunity because the S&P 500 equal weighted index is only trading at an 18 multiple, even though the cap weighted index is trading at a 24 multiple.
Right, and that's why last week was so interesting to watch the equal weight outpace the benchmark. I wonder if you think that is a sign of progress of the market beginning to survey the landscape a little bit.
Do I believe, let's just say over the next 5 years, let's just focus on the next 5 years. Do I believe that let's call it the biggest big dogs, the top of the market, do I think those stocks are going to continue to outperform the other 490 or whatever we want to call it, or 480, in terms of S&P 500? I don't think so, actually. But with that being said, I also don't expect those stocks, and this is very important, I also don't really expect those stocks to underperform in any substantial way. So I do not expect the top of the market to outperform in any substantial way. I also don't expect those stocks to underperform in any like big way. I think what's going to happen over the next 5 years is I think you're going to see a lot more equilibrium in the market, where you're going to see a lot more overall performance in smalls and bigs. So that's my personal opinion on that, because I think that is a big subject when you've seen those bigs outperform so significantly. That's where I'm at. I don't see them significantly going either way on that.
Sure.
Well, we need a bullish broadening, and we started to get that last fall. Remember when the 10-year hit 5%, and then the Fed pivoted at its December FOMC meeting, calling for 3 rate cuts this year. Of course, that's no longer going to happen. But at that point, the market really broadened. And from that point in late October until the spring, both the cap-weighted and the equal-weighted index rallied, some 28% in 6 months, which is really an impressive move. Since that time, the equal-weighted has lagged behind because it's all been about the mega growers the last few months, but you do want to see the market broadening. Right now, only about half the stocks in the S&P are trading above their 50-day moving average, which is not a great result if you want this cyclical bull market to really sprout some legs and continue.
Okay, next one up here. This is going to be a great week for AI investors. Mr. Gene Munster, are you sure about this, sir? Are you sure about this? Let's see if Nvidia broke 118 or not. No, it's chilling at 119 right now. I don't know, Gene Munster. That's a big call. Great week for AI investors. Ooh, boy. Alrighty.
Retreat from recent record highs. For more on this, we want to bring in Gene Munster. He is Deepwater Asset Management Managing Partner. Gene, any of this surprise you, or what are you thinking about what we've seen?
Becky, it was been a little bit of a surprise given I think that all the fundamentals suggest that this AI trade is in great shape. Of course, the trade-off the past week has been down 10% for the bigger chip companies. TSM is up there down 5%. And what I think it really speaks to is investors' concern. We're already jumping forward, already starting to think about how the June quarter is going to play out. So that's kind of the third week in July. So I think that that's the reason why they've been spooked. It is a surprise to me, just given I think all the fundamentals are pointing in the right direction. Recently, Deepwater and our flagship Titan fund, we purchased Micron. They're, of course, reporting this Wednesday, which really sets up for the bellwether in AI for the next 2 months. Nvidia is not going to report till the third week in August. And so, Becky, I think that I'm surprised about some of the concern. I guess it's warranted given part of the run. And I think this is going to be a great week for AI investors because ultimately, I think Micron is going to exceed that 87% revenue target that they have out there, and investors are going to be more confident in the 50% growth that they have for next year. So feeling very good about AI, the AI trade here.
Yeah.
So I completely disagree with Gene Munster, and I mean completely disagree. And when I say I completely disagree, what I'm specifically talking about is this thought process or notion that he has of this Nvidia fall being a fundamental related, like people are concerned about the fundamentals and what the June quarter is going to look like. No, that's not it at all. This is strictly a move based upon technicals, based upon stop losses, based upon people wanting to just take profits because they made a lot of money in the stock, based upon their overweight because Nvidia's gone up so much. That's what this move is really based upon. It is people just, when the stock goes down a bunch, let's say Nvidia goes from 140 to 119 or 120, whatever, right? People are just looking for things to talk about. And then, maybe it's fundamental based. Are we worried about the quarter? Like if you're worried about Nvidia's quarter, right? This week, you were also worried about the previous week and the previous week and the previous week. Like it's not like that popped up. Like, oh, the stock went from 140 to 120, so now I'm concerned. No, it's not how it works.
I was going to say, Gene, it seems less surprising if you're looking at a 6-month or even a 1-year chart. Just this massive run-up, the pullback is barely noticed. If you're looking over a longer-term chart, it doesn't even register. Not everything grows to the moon, even when fundamentals are in their favor.
Fair, that is true. And as you said, if you look at, let's take Nvidia out of the picture and look at some of the other big chip players, they're up, call it 60, 70, 80% year to date, even with that 10% pullback. But it does beg, whenever you have big runs like this, it does beg the question, can it continue? And I think investors, as we go into Micron on Wednesday, I think they should be asking themselves just the fundamental question: how disruptive do you think AI will be? If you're in the camp that the substance ultimately is going to exceed the hype, that's the camp that I'm in. I think that even though we've had big runs here, there's further asset appreciation in the horizon in the next 1 to 3 years.
Although, Gene, you can be in that camp where you think things are going to be very disruptive, but still wonder which are going to be the real winners that come through, and start to wonder, okay, if you have big players like we have to this point, big companies that are willing to spend a lot on AI, does that translate down to mid-level and smaller companies before you see actual benefits? Like, there could be a pause before you see everybody else kind of taking this on.
Yeah, I think, definitely, we'll see those move forwards, those steps back. And the way we see it playing out is that there's this opportunity on the chip side, the hardware side. Of course, that's been playing out. I think it will continue to play out for the next 1 to 2 years. And then there's this huge gap. And I think that the most exciting pieces that are going on in AI are still in the private markets. They're companies that don't get talked about as much, companies like Andro or Databricks. These are companies that are, I believe, going to be leaders along with OpenAI and xAI in what will be a new class of public companies coming out next year and in 2026. And so I do believe that we are in the early stages of a bull market, still early stages of a bull market in the NASDAQ. May seem hard to believe, but I don't think that that will be created equally. I think that some of those are going to come from IPOs that will be coming out that will be these first AI first companies, which will be really exciting on the software side, which really hasn't participated yet.
Gene, I know you personally own Apple. I just want to ask you about some breaking news from early this morning. The EU regulators are saying now that Apple is in breach of what they're calling sweeping new tech rules because it doesn't allow customers of its app store to be steered to alternatives. The potential fines are huge when you start looking at this. You could be talking about 10% of global revenue that they're allowed to fine up to. We were talking earlier this morning about how that's... How many $1 billion was it?
30 plus.
38? Okay, $40 billion. As an owner of Apple, what do you see when you see European regulators talking like this? We've always kind of worried what China might do, but what about Europe?
Well, the first thing I do is I look at the facts here, and they've said on the last earnings call that they gave at least details that you can back into. It's about 1% of revenue we're talking about. And so that's first and foremost. These are preliminary findings. We're going to get the ultimate findings in March. And this is a chess game that's going on between Apple and the EU. Apple's not going to want to give anything. They kind of came out with this 3-point plan earlier in the year in terms of how to accommodate some of the DMA regulation. But ultimately, I think as this plays out, they will make some modest changes. It's going to likely have a neutral to slightly negative impact on that 1% of their business. The biggest question you ask, like, how do I think about this? What's on my mind is what's going to happen in the U.S. And there's a whole, of course, another set of regulations going on there. That's a much bigger deal. And then now we're talking about 6-7% of revenue when you look at the U.S. and their app store. And so I ultimately believe that Apple is in a great position in terms of where they're at with regulators. And I think that you're going to see a lot of negative headlines. But this news today won't keep me up at night tonight.
Yeah, I mean, the tough thing for Apple is think about it for a moment. Their biggest successful business right now is services, right? That's what's bailing out the whole rest of the business model right now. The iPhone numbers have been trash. We know Mac numbers, iPad, everything else with the business has been bad. But the services business has been kind of the bailout, right? But the issue here is if that services business is really hurt in any substantial way, whether it be in the US, EU, doesn't matter where, I mean, that's a huge deal. And, if you think back to the internet revolution, Microsoft had to make it over time where you could use different internet browsers. And Apple's gotten away with, having exclusive only the Apple App Store, right? Which obviously has dramatically helped their services revenue over the past 10 years, as we all know, right? But will they be able to continue to have it be that way over the next 10, 15 years? I don't know. We'll see. But what we do know is these governments need money. We do know that. We know all these governments are heavily in debt, and we do know Apple's an easy cash cow. And so, don't be surprised if Apple just has relentless pressure on them for the next 5-10 years. And that's something that if you hold Apple stock, you just got to understand you're going to be taxed very heavily. Next one up here, let's talk Nvidia.
It's again at the pre-market today.
Talk Nvidia fundamentals. I like this.
Investors cooling on the AI giant in the latter part of last week. This morning, you can see the stock off by about 1.8%. Still, month to date, the stock's up 13%, and a much bigger run if you're looking year to date or the last 1 year. Joining us right now with his take on the stock of the moment is Ray Wang. He is Constellation Research founder, chairman, and principal analyst. Hi, Ray.
Hey, good morning.
You've got a $200 price target, and you say there's an entire list of 7 reasons why you are convinced this stock is going to get there. Why don't you lay out the broad argument?
Well, Becky, there's 7 modes that are important on why the stock will hit 200. First is the visionary-led CEO, and that's
200. Okay, going to 200.
Very important, as you've seen in the Valley. Those are the ones that have led, like the Larry Ellisons of the world, the Scott McNeelys, the Mark Zuckerbergs. The second one is the high barrier to entry.
So CEO, great point on Nvidia as a long-term investor. Yeah, barrier to entry, number 2.
Few competitors that can come into this chip market, and it takes a long time to get a chip to market. If you can do that, and if you succeed, and then if you can actually get the right chip, that's a very, very hard thing to do.
That's true. And if you look at what AMD has in the market, if you look at what Intel has in the market, I mean, yeah, Nvidia is really running their own race, and they're extremely difficult to compete with. And then obviously you have many of their biggest customers are trying to create their own chips, but man, they just can't do it. They can't create the type of quality, the type of high performance that Nvidia has, right? So they're trying to catch up to where maybe Nvidia used to be, but that might take them another year, 2-3 years to get to where Nvidia is at today. But the problem is Nvidia keeps moving forward, so you're kind of stuck continue to buy Nvidia, or you're just going to have backwards looking technology, which then is going to hurt your business model, right?
Third one is high switching costs. Once you're in, you're locked in because of the CUDA software. You're able to access the chips, the software, and the...
Yeah, a great point. And developers using that CUDA software also, yes, 100%. Great point.
Stack, you're going to be locked in for quite some time, and they've got quite a lead in terms of doing that. And of course, Nvidia's had dominant market share, and I think that makes a big difference because they've been in this market for quite some time, and the competitors are behind by 24 months. And then, of course...
Yep. 100%. Yep, competitors are behind by about 24 months. That sounds about right. And really the only somewhat competitor we can even think of is AMD, and that's it. And AMD's definitely at least 1 to 2, if not 3 years behind Nvidia right now.
Only seeing 1/10, maybe 1/100th of the product roadmap that Nvidia has out there. And that's really exciting for those who actually have some insight into what they have next, because it...
Great point. Nvidia is on an every year chip cycle now at this point in time. So Jensen's come out and said that, and so they should be coming out with a new chip every single year. So yeah, and then there's products that Nvidia is working on right now that we certainly haven't seen yet and probably won't see for another year, 2 years, 3 years.
More than just chips, and it's more than just what's happening in software. That ability to go from silicon to all the way to the end side, that's where we're going to see a lot of the innovation. And of course, the ecosystem has made the GPU a default standard. It's the standard of everyone's looking to for AI, from inference and testing. And of course, the numbers don't lie. I mean, we're seeing some amazing growth here that actually matches the PE ratio, and that's what everyone's looking at. They're trying to figure out how this is going to continue, but gross margins of 78%, 262% growth compared.
Yeah, 100%. Man, what's this man using? 1000xstocks.com to get his numbers? 78% gross margins, 50% plus net margins. The growth rates, 232%. Expected this year. Trailing 12-month revenue growth, 208%. I think this man uses 1000x stocks. He's got the best.
A year ago,
gotta use the best.
This is going to continue for at least the next 18 to 24 months.
So how do you describe the pullback over the last week?
Oh, the pullback is coming out of macro level. People are worried about the consumer side. People are worried about where the economy is going to head, and they're doing some profit taking before the summer. So
yeah. Once again, there's nothing more to this Nvidia move. Like, it's just funny everybody wants to put it on something. Like, there's nothing fundamental based there. If people are really concerned about the market, you see the whole market selling off heavily. Not Nvidia. It's Nvidia specific because of the stock price move. and technicals and overweighting and underweighting and all that stuff. I mean, that's what it has to do with. It has nothing to do with the fundamentals of the economy or the stock market or Nvidia itself. Nothing.
I think it's a good time to buy the dip.
Ray, there are some people who look at this and say, okay, this is the equivalent of what we saw with Cisco back when the internet phenomenon was taking off in the late 1990s. How is this different?
I think this is different because when we were looking at Cisco, when we were looking at where Intel was and where Microsoft was, that era was really built on those three companies. I think Nvidia has learned from those lessons and realized that they have to go much broader than just being a separate company building just chips. What Nvidia has done has built partnerships that are going to last the next era. And so in the age of AI, we actually believe AI begins and ends with Nvidia because they've actually built out a roadmap that is much more encompassing than where networking was or where software was. They actually see that end-to-end vision, and that's one of the interesting things with what we see with Jensen's overall vision.
Yeah, and the other good news for Nvidia is you think about them. I mean, Cisco back in the day, a total different situation, right? But you think about Nvidia, their biggest customers are who? Their biggest customers are the biggest, strongest companies in the world, right? And these companies are so much stronger and bigger and more powerful and have so much more money to spend than any companies did back in that kind of Cisco era, right? So when you're thinking about the Metas and the Amazons and these gigantic corporations, Microsofts, I mean, it's a different level there. So just a little food for thought in regards to that.
The stock's at 124. Your price target, $200, is the next 12 months?
It's the next 12 months, correct.
Yeah, and do I think Nvidia can still hit 200 in the next, let's just call it this year. We don't even have to take it out to 12 months. I would put it probably at like a 50-50. I think there's a pretty good probability it hits 200 this year. So that's in the next 6 months. We only got 6 months left in the year, right? How does it get there? They got to come in this next quarter, beat numbers, guide higher again, right? Have another great conference call, and then do the same thing next quarter. If they can do that 2 more quarters, they're at 200. So, but they've got to execute there. Now, on the flip side, let's say I don't think they can miss numbers, but let's just say they come in roughly in line or a very small beat, or let's say they don't guide higher on a quarter, then the stock could actually kind of flatline, and it could kind of get stuck into like a, let's call it 115 to like 130 range, and kind of remain there for the remainder of this year. So, but that's a situation where they don't really guide higher. But that would definitely zap energy out of this baby. No dang doubt about that, okay? Appreciate you guys joining me. As always, thanks so much for being here. If you're looking to apply to join 1000X, go to 1000xstocks.com, and you fill out an application there. And other than that, I might put my Instagram as the pinned comment today. Much love and have a great day.